What's up, guys? Welcome to the trade room. Today, we're here to complete part two of part three of the trilogy between Ripple Labs Inc., XRP Ledger, and XRP. We've done a lot of research. It's been years. We did part one of two, and we've done all the fundamentals. Now to look at the technicals and see where possible price movement is. Again, a market check, we see that Bitcoin is looking pretty bullish. It has actually crossed over the $43,000 mark, up almost 5% on the 7-day. XRP sits at 83 cents. And as we spoke earlier, on the 7-day, Ethereum Classic, over really 100% on the month, but on a 7-day, really bullish at 62%. We're going to talk about why that's the case, how that relates to the overall market, and how that relates to what? To XRP. You don't have to understand too much about technical analysis. Again, I'm here to paint a picture for you. I'm here to paint a picture for you of when I say the price that I'm saying, why I'm saying it, and all you need to do is just do your best to follow me through here as I explain some of these things. I'll keep it as simple as I possibly can, looking at three things, okay? We're looking at macro. Remember, macro. We're looking at 10 months, 5 months, 12 months, 18 months. I do short-term things, but for anybody coming into the space trying to protect themselves and make some money, again, this is not financial advice. You want to think longer term. You want to think 3 to 5 years. You want to think 12 to 18 months, right? And so we're looking at macro. And so we're going to read this analysis that way, okay? And we're going to do that with this channel that I've drawn here using a log scale, okay? And so we're going to look at all-time highs, and all-time highs are when the price of a particular stock or crypto runs to a high and then sees a correction there over a period of time, right? It doesn't get back to that high until a period of time down the line, right? And we kind of see that here. You have the high for Ethereum Classic, and it kind of goes down here. And it doesn't see that for a very long time, right? We're talking the high was 2018, and it kind of kept going down till 2020, right? So about 2-year gap, right? We're going to talk about no corrections past all-time highs. And so what I mean by that is, look, once it does actually escape this all-time high, right? It comes and touches it, but then escapes it. And this all-time high here, by the way, is $21 for Ethereum Classic, right? Once it touches it back here again after having a low of about $3, it breaks it and has an all-time high of what? $173. Okay. Now we're talking about Ethereum Classic. It did that May of 2021 when a lot of cryptocurrencies hit their all-time high. And then it went through a major correction where it had a low of $21 just January of this year, and now sits at $44. And what we mean by the no correction past all-time high is that when it comes down from the current all-time high, it doesn't break, right? It doesn't break this previous history that it had there. And we can see that Ethereum Classic actually just literally tapped that and is now up since that time about 170%, right? So I'm just going to delete this here, and we're gonna tap in on this later. But again, you don't have to understand technical analysis, but just follow these basic broadened pinpoints, data points that we're looking at here. So no correction past all-time highs. I just showed you the first instance of that, okay? Then we have percentage highs. What does percentage highs mean? Percentage high means I'm going to take this ruler and we're going to say, hey, from the time that it went down, right, Ethereum Classic, and it went down as low as $3, right? How long did it take it to get back to the all-time high? And we said the all-time high is where it previously was at a high at, right? And we can see here for Ethereum Classic, from the all-time low of March 2020 at $3. It took it 396 days, 13 bars, which is 12 months and 1 day. It took it that many days from when it touched the bottom to gain 591%, which is where that all-time high of $20 was from 2018. Not only that, but from that impulse, right, to that May 2021 date, which was just last year, the entire movement was 426 days, right? And 5,800%. I remember having this on my mom's account and was like, oh my goodness, Ethereum Classic is doing what it's supposed to do technically. I did not sell when it went up 5,800%. But basically, what I'm showing you here is a big impulse after going down, an all-time high, and did not go past the all-time high after the correction. But the biggest part of that movement took over a year and 2 months, and it was a 6,000% return. Now, we do see that from there, there's a big correction, right? There's a big correction of 88% from that high, right? So we have percentage highs, 6,000%, and then we have corrections, about 80–90% from that high, which these are all the data points that we're following. We have diminishing returns, and what diminishing returns means, every time it has that kind of powerful movement, when it does it again, it won't be as much, right? And you can actually really see that in Bitcoin. So we're just switching from Ethereum Classic over to Bitcoin. And again, these are macro technical analysis. This is just what we see in the bigger spectrum, because when we plan and we dish out our money, we want to have enough time, especially if we're working a 9 to 5. We want to have enough time to slowly put our money in, because we don't have everything to buy instantaneously. If you're a macro investor, now you can become a sniper and do this in a shorter span, but this content is for individuals that just want to understand how the price moves and why I'm going to buy where I'm going to buy and where I'm going to sell where I'm going to sell, right? And how much time do I have to do that? So we went over the one, we are going over two right now, the percentage highs. All right. Does Bitcoin follow the first two rules that we've laid out here? Well, let's see. We have all-time highs. So this is 2011. We had a drop from that all-time high of about what, $16. We have it come into the all-time high 2 years later, right? At 2012, we have it broke that all-time high, right? We had it correct, right? And when it corrected, it did not come back to the all-time high, right? It kind of found another leg. So it meets that first criteria. Now we have percentage highs, right? We're going to take the ruler. We can see that from that bottom there, like we did with Ethereum Classic, Bitcoin in 762 days went up 52,000%. My goodness, those people who were bought into Bitcoin from October 11th of 2011 and held till 2 years time, got 50,000% return. I mean, my goodness, if you put $1,000 in and got a 50,000% return, you're in a couple hundred thousands right there, right? So that's a significant return for buying and holding. And even if you dollar cost average, you're doing really well. But let's not get too much into that. Now, so now that we know what percentage highs are, what do we mean by diminishing returns? Well, there's a whole theory that when technology is first being adopted, even Apple or Tesla or any one of these Googles, the first few years, if you're an early investor, you get a lot of returns. But as the years go about and the cycles continue to run themselves, you get less and less and less and less and less return. And that's definitely true, but it doesn't take away from the fact that there are enormous, gargantuous returns in crypto. And so what do we mean by that? Let's grab our ruler from 2011 all the way to 2013. There was a 50,000% return. You had the correction, right? That did not go back to the all-time high, right? It kind of curved through that. And then it came back to the all-time high from 2013 all the way to 2017. So it took almost 4 years to get back to that all-time high. Once it broke through, guess what? It did not come, right? It did not come back and tap that all-time high, right? It just kind of corrected and found the move of its own. So the first movement was 25 bars, which is about a year and change. 50,000% returns. Well, what kind of returns do we get the next time, right? So from the bottom here of 2015, Bitcoin ran up 14,000% and it took 1,065 days. All right. So not the 50,000% returns that we got early on for taking the risk and being early investors and not needing as much money to raise our percentage ROIs. We got 14,000%. Oh my goodness, that's still amazing, even if you missed out in the period of 2013. And so guess what we have from there? We have all-time highs, we have a correction, and the correction, what? The correction does not touch the all-time high, right? What does it do? It forms this cup. And even though, you know, it ran here and during COVID, or the name not to be said, during that time, even with the correction that happened where Bitcoin went from a high of $14,000 down to $3,300, where it tapped this channel that we have here. It tapped this channel that we have here. It touched the all-time high, broke through. This is 2021, March of 2021. Everybody was like, yeah, Bitcoin's going up forever. We're going to $100,000. Well, it ran, got an all-time high, kind of got rejected from this middle of this channel here and came down. But the question is for Bitcoin, and we're seeing if it's respecting this second rule here, right, of a lot of great highs, but diminishing returns, but not correcting below the all-time high. Well, it corrected down here from 65,000 just last year. It tapped 69, 70,000, corrected to about 27,000. Where is this at? This is at, yeah, about 27,000, and ran up and created another high and then came down here too, but it's never crossing our rule there. It hasn't crossed that all-time high, which is down here, right? So it is respecting what? The second part of the first technical rules that we have there. And it's also getting high percentages, but they're diminishing, right? They're not as high as they were before. And so now that I've showed this on Bitcoin, we saw this on Ethereum Classic. Now we're going to see if it follows the diminishing returns one more time, right? We had 50,000, 12,000, and even in this run from 2019 all through, and the bottom was here, but the bottom was here as well. If we scan this from here, from where it went, it had a 2,193% run in 30 bars, which was 913 days. And if you bought the bottom of this movement during the Curvaceous sickness time, you would have made a 2,100% return on Bitcoin. Now, much lower than the 14,000% return, much lower than the 50,000% return. But this is why we believe that Bitcoin's bull run isn't over. It's going to, if it respects these rules, it's going to have a percentage return that's under 14,000. You know, 50,000 to 14,000 is a drastic drop, right? That's like a 5-to-1 drop, right? And so I would say if we continue that 5-to-1 drop, 5-to-1 of 14,000 is what? About 3, 6, 9, 12, 15. Yeah, about 2,500% run. So if we did not touch this high, right? And we'll use the measure. What is a 2,500% run from, let's say, the bottom of this movement here? Let's say 2,500% run. 2,500% run puts Bitcoin at like $83,000. Okay. And that's, we're following these rules, and we'll talk about why that's important later. And then the long channel projected growth. Okay. This is the long channel that we have here. You can see it right here in blue. You see Bitcoin respecting it as it moves along extract, right? Respecting it, bounce, comes down, bounce, continues to respect it, and it's following this channel here. And so where can we project this thing to go if it bounces below here, doesn't go back to the all-time high, follows the rules, and bounces from here is $83,000 of Bitcoin. Well, what is it for Ethereum Classic if it follows that growth pattern? Well, made its all-time high here last year, got rejected, really corrected down. And again, when it does correct down, it's usually a 80-90% correction from the top, right? And we can see here that this was a 87% correction from the top, and it took about 276 days from last year. And what we're seeing it do now is that it is having it's had a 140% run in the last 28 days, right? So in the last month. And so if it, goes to, if it follows the bottom here and goes to the top of this trend here with this arrow, what can we possibly, be projecting here, right? We could be possibly projecting that Bitcoin, that Ethereum Classic gets another 1,642% run right here, and possibly has a high point of $378 if it really decides to make this parabolic movement and follow this log channel projected growth. This is kind of what we're looking at with Ethereum Classic, right? And so if we are using our metrics, we are using these rules to follow these metrics and where they're going in terms of price movement, what does XRP look like? And ladies and gentlemen, this is what you've waited for. The trilogy comes to an end. The trilogy comes to an end today, okay? Now, my part 1 video was 30 minutes. My part 2 video right now is about 20 minutes, and I'm going to try to make that 30 minutes as well. But this is where we come to a head, okay? None of this is financial advice. None of this is guaranteed. This is not a premonition. This is just following just 3 metrics. And we have a whole lot of just following 3 data points and following the number 1 asset, Bitcoin, and the asset that's currently doing really, really, really well right now, Ethereum Classic, starting off the second part of the top of this cycle. We're going to start with XRP, okay? All-time highs. Where have XRP's all-time highs been? Well, we have from August 2013 to December 2013, right? If we just look at the arrow here, it had a little 2,000% run, right? And it did it in 5 bars, 5 months, right? But it created some sort of all-time high, which at the time was 0.077 cents, right? So it went from 0.034, all right, to 7 cents, which is an incredible move, right? It went through a large correction here. And again, when it does have a correction, you're talking like a 96 to 90% correction, right? So even with where we're tracking right now, the entire cryptocurrency market is going to have a savage correction of a certain percentage. But the fact that diminishing returns, remember, diminishing returns is one of our rules. Diminishing returns will make the corrections less heavier. So it's going to bring you less returns in terms of percentage returns, but it's going to make those corrections less impactful. And let's see if we see that with XRP, as we've seen with Bitcoin, as we've seen with Ethereum Classic, which is currently making an impulse. After this 96 correction, we see that it took some time, right? It took from December 2013 all the way to May 2017 for it to get back to its all-time high of that 7 cents, right? And it even broke through that, went to 40 cents, continued from there, and had a high of $3 and about 76 cents in January of 2018. So let's just track that movement. Again, we have all-time high created 2013. We have this long journey back to the all-time high, and we have the bottom. So from the bottom there, which was 2014, we map it out here. It got back to its all-time high. It took 2,600%, and it took 1,035 days to do that. So we see that XRP's history takes a long time to get back to the all-time high, doesn't it? Right? Over 1,000 days. It only took Bitcoin about 300 and something days to do it. So, okay, we have a data point, and it took that long to go up to 2,600%. But if we track it from when it really took off, right? When we track it from when it really took off from the bottom there, in 2017, it made a 70,000% movement in 306 days after being dormant for 1,000 days. In 10 months, it made a 70,000% return. Okay, so that's the diminishing returns that we're dealing with. That's the diminishing channel that we're dealing with, right? Because we have this channel here. And so no corrections past all-time high. Does it follow that rule as well? Well, let's see. We have our all-time high here. We have our breakout of our all-time high. We have it coming down and almost getting there, but not really. Never broke through the all-time high and created what? From 2017, 2018, created that second high. All right. Now we have the all-time high from there at $3.76, and we have a correction. Does it go back and test this all-time high? It doesn't, right? It comes down from that correction, just as how Bitcoin came down and the whole market went into a correction, but it did not, right? It did not, let me get this right. It did not break the previous all-time high line, right? It kind of tried to tap it, and that was during 2020 when the cerveza sickness was happening, but it certainly did not break it, even with something like that happening. And so what we see here is it followed the rule of not touching the all-time high, and we would have to check the percentage high. So now it has to make a journey where? Now it has to make a journey back to the all-time high, right? It has to make a journey back to the all-time high, and we're looking to do that within this channel here. And I don't care how it gets done or how slow it takes, but it has to make a journey back to this all-time high. And what does it have to do from there? Okay, it has to, in my estimation, break out. Okay, it has to break out, whether it breaks out to here or wherever, whether it goes all the way up to the top of the channel and then has to have its correction. That does what? That doesn't go past the all-time high and kind of move from there and do what it has to do to what? Continue following that channel. And so if we're sticking with the rules that not only Bitcoin, but Ethereum Classic and other movers who normally move early in this cycle are doing, and we correlate that to what XRP is doing and needs to do, then we can see that those early movers tell us what's going to happen to the later movers. And XRP is infamously known for being the late mover in this space, but it is known for moving with the rest of the market when the rest of the market moves. And so that's what we're following. And so if we're looking at diminishing returns, we're not going to get the 70,000% returns that we got from that previous year, at least not immediately. We're going to get something less than that. And if we follow the 5-to-1 ratio that Bitcoin had with its percentage rises and its diminishing returns, then what's 5-to-1 ratio of 70,000, right? I could do the math, but I'm just going to tap it in right here. You know, that's a 14,000% return. So what is a 14,000% return looking like? And we'll do it, let's say, from the very bottom, right? The very bottom of that movement, which was March of 2020. Okay, if we do a 14,000% return, it would bring XRP to $14.59. Okay. And that actually correlates with some different metrics, Fibonacci retracements, percentage type returns, that a $10 to $14 price for XRP is very feasible, right? From the 83 cents it's at right now. Without the SEC lawsuit, we're looking at XRP is supposed to be at $3 to $5 right now already. We're looking at this impulse was supposed to have happened already. But because of the lawsuit and the suppression of the price, a 4,000% move from the very bottom where the cerveza sickness happened in 2020 would be $14. Now, what about a 14,000% move from where we are right now? A 14,000% move from where we are right now, okay, which is March of 2022, if it bounces off of this, long log channel here, okay, a 14,000% move from here puts us at around $97. Now, again, it's respecting this channel and it's moving through this channel. So a 14,000% move from there is 8 bars, 8 months, 245 days, and a 14,000% return. But let's say it just continues to bounce in this range like it's continued to done, like even like a Bitcoin, like an Ethereum, respects these channels and continues to move within this channel. If it rises to, let's say, the top of this channel here, then we are looking and it follows the usual time frame it uses to move, which is about a year. We're following close to, again, that 52,000% return, which is still a what? A diminishing return from the 70,000% return that it's shown that it has been able to do in the past. And we're looking at a $359 XRP, 10 bars, 360 days, right? And so look, I'm not a fortune teller. I cannot tell exactly where, what, how, and what's going to happen and how it's going to move. But I understand the company is profitable, right? You have the three-headed monster, the matrix. The company is profitable. That's Ripple Labs. The technology works. It's been working for the last 12 to 13 years. And the tool that's used within that technology is XRP. And I'm watching the price movements of all these other assets, seeing that, yes, you can be in the top 10 and you're going to get high percentage returns from every single asset in the top 10 when it comes to cryptocurrency, better than the stock market. But when it comes to seeing the history of what an asset can do, technically on the prices, seeing what Bitcoin has been doing, seeing how much money is in Bitcoin and how much money needs to move Bitcoin, I'm not interested in that. I've seen the history of what XRP can do. I've seen the percentage returns it brings. And if it continues to follow its history, all I have to do is hold it. And at some point in time, it's going to respect these channels and it's going to get into these price appreciation. So again, a lot of speculation. What is our price prediction? Well, it's not a prediction. It is a speculation. We know that, $359. Okay. We have $359. Okay. We also have $10 to $14. Okay. But before that, we also have, I think we saw $96 or $92, right? And so really, those are my price predictions, right? Those are my price predictions. That's what I'm looking at. And the reason why I say that is because through all of those moments, there are going to be corrections, right? There are going to be corrections between 10 and 14. There are going to be corrections between 96 and 14. There are going to be corrections between 359 and 14, but I think it's very capable for XRP, which has a 40 billion market cap right now to be a $1 trillion asset, because Bitcoin is a $1 trillion asset. This space all in total is a $2 trillion asset, which is going to be a 50 to $100 trillion asset class in the next couple of decades. And so, you know, when we look at XRP and we look at the different things that we're looking forward to, I have other metrics and other breakdowns that I've done, which show that, look, we have a few dates ahead of us. We have the court case, we have summary judgments, we have the launching of the ISO 222. Again, watch part 1, watch part 2 in order to watch part 3, learn about the petrodollar, and understand why I'm sitting here with a $150 to a $300 XRP within the next couple of years. And on this analysis, I have 225, and we continue to get the same mathematical breakdown for where we believe XRP is going to be based upon the different metrics that we are using. So that's the full breakdown. The longer you hold with XRP, the more you'll make. If you try to time the markets, things won't go out well for you. But if you use all the information you have, if you pay attention to what's happening in the world, the matrix is very clear. Okay, the matrix is very clear, and we understand what we hold, and we understand the value of what we hold and where it's going. So, ladies and gentlemen, the trilogy, part 1, part 2, part 3, and now the price prediction in part 3A and B is done. The technical analysis is done. Listen, I'm not doing another breakdown so XRP crosses all-time high. Put it down right now. I'm not doing another breakdown so XRP crosses all-time high, and then we can talk. Because this is, we're macro here. We're not here for 2 months, 3 months. We're talking 12, 18 months to see what's going on. And with right now XRP's price, okay, XRP's price, we're time stamping this. XRP's price currently sits around 83 cents. Okay. And so it's going to be fun watching this, tracking this, seeing where this goes. Remember, share this with anybody who's interested in possibly learning about XRP, digital assets, crypto, and just wants to know a little bit of information, some facts, some speculation. Comment, like, subscribe. It's been a while. We're going to put out some new releases, and hope you guys enjoy a little bit of the value that I'm sharing in the trade room. Peace, guys.